Central Bank's Monetary Policy Committee started its two-day rate decision meeting, the fifth for this year. Some of the factors that members will consider include the inflation report for August, which showed a fifth consecutive month of disinflation year-on-year across all the key inflation indexes. Top on the agenda would be the country's inflation issues within the forex market, intervention programs, as well as other burning economic issues. Analysts expect the MPC would retain monetary policy rates as well as other key parameters unchanged at the end of the meeting today. Well, we have Akintoye Oyelaku now, an investment analyst with Cordros Asset Management, to tell us more. Great to have you on the program. Good morning.
Good morning. Thanks for having me.
Yeah, so the committee will discuss issues revolving around the global and domestic economy and decide on the next course of action to help, sustain recovery of the economy and the achievement of its objectives. What is your expectation concerning this?
All right, thank you. So basically, I expect the talks to be around the development around the global rate of vaccination, which we have seen has gained positive momentum since the beginning of the year. And also, I think the talk will also focus on the recent decision by OPEC plus cartel to raise supply by 400,000 barrels per day. Of course, these two scenarios are likely going to be beneficial for economy, for the Nigerian economy. Also, domestically, I think the talk to be around the GDP performance for the second quarter, where we saw Nigeria recording 5.01% growth, and also inflation numbers that came out recently, which showed a sustained deceleration in the rate of inflation, even though inflation still remains very high. We saw inflation moderated to 7.01% in August. Also, another major issue that will be discussed today will be the recent volatility that we have seen in the FX market, more specifically the parallel market. So I think on the balance of scale, it is very unlikely that we're going to see a hawkish stance by the MPC, given the fact that a hawkish stance is going to halt the positive momentum we have seen in terms of economic recovery since the beginning of the year. Nigeria recorded the third consecutive growth in the second quarter. So I don't think the MPC would like to halt that trajectory. And also, given the fact that a hawkish tone would mean a high cost of borrowing for businesses and also for government, and this will not likely be the decision for the MPC, given the fact that Nigeria is currently having an issue with revenue. We have a revenue shortfall. We are going to be able to optimize revenue from oil and from other sources. So I do not expect to see any hawkish tone by the MPC. On the other hand, the easy stance will also not be likely, in the sense that loosening the economy will mean that there's going to be more pressures on inflation numbers, and it will also increase the potential for more speculation on the already volatile naira. So this is not likely going to be the case. So looking at everything on the balance of scale, it seems like we are going to see the central bank maintaining the status quo, similar to what we saw in the previous month, in the previous meeting of the committee.
All right. Also from the previous meeting, the BDCs did not have it easy. That was where we learned that the CBN would halt supply of forex to the BDCs, and they've been in the news since then. We've had a lot of statements from the BDC, from the central bank, about the management of FX. What do you expect from that perspective? Any more hammers on the BDCs, or do you expect any other changes to the management of FX? Because it seems to be a very hot topic, like you mentioned. The value of naira compared to the dollar now is something else.
Yeah, so basically, like I mentioned, that's going to be one of the major issues that will be discussed today. And looking at the previous decision of the MPC to halt the supply of FX to BDCs, and we saw an announcement of commercial banks as the new channels for disbursing the FX, but this has not been very much successful. We have seen a problem of arbitraging by some customers who access FX from commercial banks and then go to the parallel market and then make a good spread on the FX. And also this has led to a halt in the supply of FX for the commercial banks. We have not seen that even the customers that need it for legitimate reasons have not been able to access it. as a result of that, it's created more demand for the parallel market, and as such, you saw a spike in the naira to dollar levels at the parallel market. So what we could see today is a potential for the reversal in the previous decision that the MPC made before in terms of halting FX supply to BDCs. We may see, the restatement of BDCs as a channel for FX disbursement, although we might see some adjustment in terms of their modalities to halt the rent-seeking behaviors, which led to the central bank halting FX supply to BDCs initially. If this is not done, the pressure on the naira will likely remain at the parallel market, and we may see naira trading at elevated rate compared to the dollar, even towards the end of the year, if we don't see any attempt by the central bank to halt these recent challenges that we have seen in the FX space.
All right, given your position on the MPC stance, how do you think this would shape the performance of key metrics within the economy, for the remaining part of the year?
Yeah, so basically, if our expectation comes true, if we see a status quo decision by the MPC, it will also mean that the pattern we have observed since the beginning of the year will continue. We'll continue to see the weak base effect continue to drive the recovery in GDP performance. You recall that in the third quarter of 2020, we had a 3.6% contraction in GDP. This has created a lot of room for Nigeria to record between 3 and 4% growth in the third quarter of 2021. So basically, if status quo is maintained, we'll see things going the same way that we have seen them. And if we should see resilience in a rebound in the oil sector, we should see a very strong growth. And also, if non-oil sector remains resilient as it has been since the pandemic, we are going to also see Nigeria's economy printing at a strong rate for Q3 GDP performance. Also, another major indices to look at is the inflation numbers. If the status quo is maintained, it means that business will go on as usual, and we are likely going to see the high base effect in inflation numbers continue to play a major role in pulling down inflation figure on the year-on-year basis, even though it's still going to remain likely elevated when you consider the fact that there's still a lot of insecurity which is affecting food production, which is also impacting the inflation number significantly. So this will likely mean that we're going to still see a sustained moderation in inflation numbers towards the end of the year.
So paint the picture for us. If the status quo is not maintained, what can we see or what can we expect?
All right, so if we see a tightening of the economy, it simply means that inflation is going to be controlled more, but it means that borrowing costs will be higher, business performance may be impacted as business will need to borrow at higher costs, and it will also the rate at which they could raise capital for their businesses, and putting that in addition to the current challenges that we have in the domestic economy, and that could actually halt economic activities in terms of productivity and consumption. Also, this would simply mean that we'll continue to see more pressures in terms of inflationary pressures. And, this is not something that this central bank will actually want to take place. On the other hand, if we loosen the economy further by making cost of borrowing cheaper, or metrics become lower so that it will accommodate more business activities. And this will only imply that there's going to be more activities, more demand, which will create more inflationary pressures. And already inflation numbers are significantly high, and it is far beyond what the central bank benchmarks its expectation against, which is 9%, achieving inflation rate of 9%. So if there is a loosening of the economy, we're going to see inflation numbers strengthening, which is very bad for the economy. Although it will be positive in terms of GDP performance, we may see GDP performance strengthening as we see more borrowings for business activities.
All right, so since the last meeting, the headwind in the parallel market has resurfaced, following calm after the committee announced the commercial banks as a new channel for disbursement of FX. Since then, the naira still, remained weak. What do you think is causing this?
Yeah, so basically, you recall that the CBN had a ban list of items which are not classified as legitimate items for FX access. This automatically means that those sectors will have to go to the parallel market to source for FX. And then you call the recent banning of BDCs in terms of stopping the supply of FX to BDCs. This actually crippled their source of supply, even though the central bank is not only their major source of supply, they also get FX from other sources. So what we saw was that when the CBN announced commercial banks as the new channels for FX disbursement, we saw a level of calm in the FX market. However, due to the fact that there was, the FX distribution was not very successful through the commercial banks, we saw a lot of demands going back again in addition to the existing demand. They were going to the parallel market to source for this FX. That's created a lot of demand, and it's just a basic principle for demand and supply. When you have a lot of demand for a commodity or a currency, it simply means that it's going to be exchanged at a higher price, and that means that suppliers could get more premium. And that's what we have seen so far in the parallel market space. We have seen they are closing at close to 570 naira to the dollar levels. And so it's basically a function of demand, too much demand for the parallel market. That's what has been driving that volatility that we have seen in the parallel market so far.
All right. Earlier you talked about, you mentioned the issue with oil prices. Of course, Nigeria's revenue and economy is highly dependent on the cost of crude oil in the global space. Now, this week, for instance, we saw a lot of movement in the oil space because of the Delta variant, because of the hurricanes that we saw in the Gulf region and all that. How should this affect the decision of the MPC, and how can it affect the outcome and the possible impacts on the economy, the movement of global oil prices?
Okay, so basically, as we all know that crude oil accounts for close to 90% of Nigeria's exports. So whatever volatility we are seeing in oil price will definitely play a major role in the decision of the MPC. Also, when you consider the fact that FX crisis, oil market crisis, one of the reasons why we saw foreign investors exiting Nigeria's market. After the pandemic struck Nigeria, we saw a lot of foreign investors exiting, given the fact that Nigeria is largely dependent on the oil market, and given the expected volatility, we saw foreign investors exiting the market, and there's been a lot of talks around the naira being overvalued and the likes, and also you recall the strategy of the CBN in terms of keeping the naira stable following the exodus of foreign investors. We saw that there was a lot of tight supply of FX, and it has in a way affected the sentiment for foreign investors, and that's one of the reasons why we have not seen a lot of foreign investors coming back into the market. So this is likely going to take a little bit of time, and some of the challenges we are observing in the FX market right now is because of the fact that the oil market has not been very favorable, although it has been favorable in terms of our ability to leverage on the currently stable oil price and high price. We have not been able to leverage on that given the technical glitches that the Nigerian oil sector has experienced so far. So, the oil market plays a significant role, and if there's another shock to the oil market, it will definitely take a toll on the Nigerian economy, and this is what the central bank will be willing to avoid. And given the fact that foreign investors have not started coming into, if you compare it to pre-COVID-19 levels, it means that the central bank will be trying as much as possible to manage FX supply. And that's one of the reasons why we have been seeing a lot of restrictions. So I think it's going to be a major factor for the central bank. The central bank will be looking at FX management very closely until we see improvements in terms of productivity in Nigeria's crude oil, and also the foreign investors coming back to the domestic market. So it will definitely shape the decision of the MPC around FX.
All right, so considering the decline in inflation numbers and the expected decision of the MPC, what's your expectation on how the market will react?
Well, so recently we saw inflation numbers coming out, and investors were anticipating what the auction result was going to look like. That's the treasury-based market auction. And a lot of investors anticipated an increase in the stop rate. However, against what the expectation was, we saw the CBN maintaining stop rate at the previous level. Another major factor that investors will be looking at now would be the MPC, what the MPC decision is going to be. So after the close of the MPC, we also see that affecting or shaping investor sentiment. So if the status quo is maintained, it simply means that with the auction result that we saw, the numbers in terms of the yields on fixed income assets will not likely move upward from what we have seen so far. And as a result of that, we might see a lot of investors taking position to lock yields at their current levels in anticipation that there's not going to be a subsequent increase in yield. And not to forget the fact that we still have Eurobond issuance coming in, which will reduce reliance on domestic borrowing. So investors will try as much as possible to lock in on yields at the moment to take advantage of what we currently have, now for them to be able to optimize their potential return. For the equities market, however, we may not see a lot of bullish sentiment, given the fact that we are seeing that any season is waning. The impact of any season is waning. Corporate action is the major driver of the performance at the moment. However, this is not to say that there are no opportunities in the equities market also. There's still a lot of stocks to take advantage of at the moment. Stocks that have delivered strong numbers and are currently underpriced at the moment. So there's still a lot of opportunities for investors, both at the equities and the fixed income market at the moment.
All right, sir. Thank you so much for sharing your thoughts with us ahead of the MPC, which is going to end later on today. And, of course, we're going to bring that live. Akintoye Oyelakun is investment analyst with Codros Asset Management, and he shared his thoughts with us on the MPC, the 5th meeting for the year. Thank you so much. Enjoy the rest of your day.